Today we're taking a deep dive into the pre-offer full approval.
Yes, we are.
That we referenced in a previous video.
Yes.
This is based on a lot of questions we had from people follow up because apparently I nutshelled too much and didn't lecture enough.
Personal joke. Okay. Anyway, go ahead.
Okay.
All right.
So what is it? What is a pre-offer full approval?
All right. You want me to go to that?
I'll do it.
Okay, go.
So as we mentioned before, this is where we fully, no, I don't want to know.
Okay, so pre-offer full approval.
Can we start over?
No, we're gonna go.
Okay.
We're gonna go. All right. Full offer pre-approval. Pre-offer full
No, it's
approval.
a pre-offer full approval.
Yeah, pre-offer full approval is when instead of just doing
It's a POFA.
It's a POFA. Instead of just doing a pre-approval letter, you go through the entire underwriting process and you, the buyer, get fully approved. So there's a couple things to keep in mind. The borrower has to be fully approved, and the property.
It's like two buckets.
Yeah.
Your lender has to fill up two buckets.
Yep.
You, the borrower, buyer, are a bucket, and the property is a bucket.
Yeah. So once you're under contract, typically you have a pre-approval saying this bucket, the borrower, is probably going to be good. You still have to do the property. Well, if you get a full offer pre-approval, this guy's taken care of.
Yeah.
And that's the one that takes the most time.
Yeah, the POFA is the best.
Yeah. So
You get MOFA for the POFA.
So you take the POFA out, and then you can shorten your time. So that's what a full approval is. It's basically you are being fully approved. The lender is saying we can fund your loan.
Yes.
So here come the questions on that subject.
Okay, how does it strengthen my offer?
Okay. So what you can do is basically, you gave a great analogy on this about the different people.
I did.
Yeah. You want to go with your analogy?
No, go ahead.
So basically, when a seller is looking at an offer, you have units. He's already so we had, like we talked about, we had the borrower and we have the property.
He's bringing the property.
He's got the property, so now we just have the borrowers.
Yeah.
And so he's looking at each individual borrower.
So you have borrower one.
Cash guy.
Cash, I have full cash offer, no appraisal or anything.
Yep, so he is a great buyer. Borrower number two is somebody with a PUFA.
POFA. It's a POFA.
A POFA. So our POFA. Our POFA is pretty much like a cash buyer because he's already approved. So he's in
I'm
great
looking
condition.
at you. Wait a minute.
Yep.
You're bringing all this cash from the bank. All I have. Wow, you're sort of like a cash buyer.
And then borrower number three is somebody who just has a pre-approval. So he
or
has
even
not,
worse, a pre-qualification.
Yeah, or even worse, pre-qualification. So he has not been fully approved. So there's a 21-day window with this guy that the seller doesn't even know if he's going to qualify. So if he's got two of these people and all things are considered equal, like the price.
Yeah. I'm going to go ahead and be like,
he's out.
no to this. So
it goes between these two guys. Now, how do you compete with a cash buyer? Well,
I got all this money.
Yeah, so I'm going to undercut you. I'm going to come in low.
Yeah, because I'm cashed, I'm going to give you like, I don't know, maybe $25K under your asking price.
Yeah. So a lot of times cash buyers are going to come in under asking price, or they expect to get leverage with that. And if you can come in,
they can
usually. Yeah. But if you can come in fully qualified, fully approved, you're basically competing with that cash buyer.
This guy's saying like, look, if the property you're selling me is great, my lender's gonna like it, you already know I'm great. I got the POFA.
That's right, you got the POFA. So it positions you stronger as the buyer. Also, it gives you a shortened time frame as far as the contingency, or not the contingencies, but the settlement. You can actually shorten your settlement date down to 10 to 14 days versus 30 days, which reduces the risk to the seller.
Right.
So that's how it strengthens your offer, is in time and the strengthening or the positioning of you, the buyer. Okay, what was the next question?
Okay, does it increase my risk by removing the finance contingency?
That was the other benefit. You can actually remove your finance contingency, so that's one less contingency that the seller has to be worried about you using to get out of the contract.
Yeah, and that does not mean that you waive the appraisal contingency.
That is true.
You can keep your appraisal contingency like, hey guy, I'm great. As long as your property appraises, we're good to go.
And quite often when we have that conversation with the seller's agent's going to say, well, why are you worried about the appraisal? It's going to approve. And that's when we say,
if they
great,
say that,
great, then
what
we
do
have
we
nothing
do?
to worry about. High five. So great, if it's going to approve, let's keep the appraisal contingency because there's no concern. So you can still maintain that protection.
Okay,
right.
This is one that is we need to talk about from the buyer and seller perspective, and it is, does it really save that much time? Is it really that important? I hope we've already addressed the importance of it, but time. Okay, I'm going to take the buyer's perspective.
Okay.
this is you have all of these documents that you have to provide your lender to get approved for a loan, right? And they're going to ask you for your preliminary documentation. They're going to say, hey, we need to run your credit. There are all these things that they require.
That's for the pre-approval.
For the pre-approval.
Yes.
Once you're under contract, typically, they're going to send your file to underwriting to get your full approval. When underwriting gets that, they're the little like mechanical minds behind the scenes that say, oh no, we need this, we need that, we need this for overlays, more or less depending on what your situation is. And that's when you hear from your lender say, hey, by the way, we also need this. And you're like, oh, okay, let me get it real quick. Oh, by the way, we also need this. That happens a lot. And it's better to have that happening when you're not already under contract dealing with, oh, I need to schedule my home inspection. Oh, I need to be there for the home inspection. Oh, I have to negotiate potential repairs on the home inspection. I need to think about this. And I'm assuming you still have a life while you're buying your house, right? And kids and dogs and spouses taking up all the time.
So in other words,
it saves the buyer a ton of time. You get to just go through all this and then go through all that once you're under contract.
We always tell our buyers that the first 10 days that you're under contract is chaotic because you're trying to meet all the lender requirements and the inspection and the appraisal and all this. So she's right. So if you've already done that, then that really calms down the time during the process. From a seller's perspective, the saving of time, when you can shorten that settlement deadline from 30 days down to 14 days or even 10 days, to a seller, that is very, very appealing because that allows them to know that they're going to have that property sold. Wouldn't you rather sell a property if you were a seller in 10 to 14 days versus having to wait a full month and then wonder in that month if something's going to fall through?
Right. It's kind of like waiting for someone's, back in the old days, waiting for the check to clear. It's like, oh, I don't know if that check's going to clear before I can spend it. And that doesn't mean the sellers have to get out. I mean, you might be saying, well, what if the seller wants to stay for another 30 days? Well, fine, you do a rent back and all that. So that doesn't
So the time is very significant, both from the buyer's perspective, it's a benefit, and from the
it's a huge weight. It's a relief for everyone. And for your lender, too. Right?
Absolutely.
It's also,
the pressure. Okay, so this is a question. This is one we've gotten from every person that's asked us about this. Does it lock me to that lender that gives me the full approval? So I'm going to answer a small part of this, and then Kelly's going to go into a little more detail. So first thing is, it does not lock you into it, but by essence of you shortening your timeline, if you have a lender like, for example, a credit union, that almost all credit unions take a full 30 days to close. So if you put an offer in and you put in a 15-day deadline because you've got a full approval, that credit union is not going to be able to close it. So based on that, it locks you into lenders that can meet that time frame. And then also,
what was my point on that?
your point, you were talking about not dating. You were talking about, it's like, go get all your dating done first.
Front, right?
So would you recommend, let's say that you have 3 lenders you're considering working with, okay? Would you recommend go ahead and getting 3 full approvals, and then you've got all 3 of these lenders? So when you go under contract and you get your loan estimate, you can take that one day and go to all of them and see who can get you the best rate. But at least you've got the full approval from all the lenders, and you're not messing around.
100%. If you are scared of commitment, you're going to end up going through all those hoops you're jumping through. Now you're brave enough to jump through that with 3 or 4 other people at the same time that you're under contract. That's ridiculous. Don't do that. Go ahead and date everybody with the POFA.
And get 2 or 3 POFAs if you really want to make sure you're
getting
pre-offer
full approval. Pre-offer
because
full
they
approval.
can't, and I know we're getting a little long on this, but they can't actually go back and forth on the interest rates until they get that loan estimate, which happens when you have a ratified contract. So getting those multiple POFAs, POFA?
It's POFA.
POFA. Multiple POFAs, you will now know, okay, once we're under contract, these are the 3 that I'm going to go to and have them compete against each other, and then that's where you can do it in a timely manner.
And just so that I make sure I do lecture a little bit to make you uncomfortable, and I want to say that going through that process with these lenders, it won't only show you your final interest rate and everything, but it'll also show you who you prefer dealing with, who's responsive, who's intimidated by you dating around, or who's being like, you're gonna end up with.
There are lenders that will be like, why am I even bothering? And they'll walk away.
Yeah.
So, and do they answer you after 5 o'clock? Do they answer you on weekends? Because these are all important things. So, okay. So these are the questions. A PUFA.
PUFA. A PUFA would have 2 O's. There's
This is true.
it's
Or you.
pre-offer.
Okay. So a PUFA.
A PUFA.
A PUFA is very, very strong for you. You really have nothing to lose on it.
Yeah.
We highly recommend if you have the time to do it, go ahead and get it done. Get 2 or 3 of them so that we can walk into your offers with a lot of strength and help you win, because it's only going to get more
And by the way, don't say PUFA to a lender
don't
or
say
anybody.
that.
I mean,
we
nobody.
made this up.
We just.
Yeah.
It's our thing.
We'll help you with that. So anyway, I hope this helps. We're going to get to the numbers. You're going to be surprised by what the numbers look like.
Give me a hint. I don't want to be surprised.
Well, we're.
I know I have to watch our
We're
videos.
so we are actually in a stronger market than we were in March of last year, in activity, in buyer strength.
I saw that.
Yes, we are in a stronger market than we were before the interest rates went up. So if you're waiting for rates to come down, if you're waiting for prices to come down,
get over it.
Get over it. It's time to get in the market. Okay. All right. Let's go to the numbers and let's do this. Talk to you later. Okay, so we are into the spring market, and just like we were somewhat expecting, inventory has finally started picking up. What you're going to find is very interesting as we look at these numbers. I'm going to compare them to 2022 before the interest rates started rising, and I think you're going to be surprised by the results. So the inventory did pick up this last week, which is a good news because a lot of buyers just haven't been able to find properties. But the inventory is coming off again very quickly. So it is highly competitive. You're going to see that in the numbers here. And just buyers, be prepared. Sellers, it's still a great time to sell. Properties are flying off the market. It's crazy. And it's just a fantastic time. It's actually a really, really good market because even though properties are flying off the market, from a buyer's perspective, if they go above ask, they're not going extremely high, like $300,000, $400,000 above ask. It's just they're getting a little bit over a premium, a little bit of a premium. So sellers, you're still able to capture some extra appreciation. You're also able to capture all that appreciation that's happened over the last several years, and get your property sold very, very quickly and take advantage of this hot market right now. Okay, so let's dive into the numbers and let's see what's going on. Okay, as you can see, as always, let me get my little red pen here. Buyer activity is the orange line. So buyer activity did decrease just a little bit over the last 7 days. And the reason for that is because we had such a low amount. So we had this huge drop 2 weeks ago. And then last week we came up a little bit, but there was this huge deficit. So we had this period right here for a period of 2 weeks that we were in a really, really strong seller's market. So in other words, there weren't any houses to buy. So the buyer activity did drop a little bit here. Inventory took a significant uptick this week. And we were saying when we were down here and when we took this big drop and then we only went up a little bit over the last couple of weeks, I was saying that I anticipated that at the beginning of March, we'd see inventory start to rise, and inventory is rising because most sellers wait till the spring market when most buyers are out there. So the inventory did rise, buyer activity came down just a little bit. I expect next week to see this buyer activity go up proportionally to this. I don't think it'll go that full, but it will go in an upward direction. And I anticipate inventory, it's hard to tell. It may go up a little bit more, it may take a little dip, and it might start stair-stepping its way up, okay? But we're certainly in an upward trend from this point right here. The market has been in a very strong upward trend. Now, here's what's interesting about this. I'm gonna change my color here. This is March 3rd of 2022. So buyer activity was right here. Look where buyer activity is here. Okay, it's higher. There's more buyer activity March of 2023 than there was of March of 2022 before the interest rates went up. Inventory was right here, and inventory is right here. The market is actually, if you look from here to here, the market is actually more active than it was in 2022 before the interest rates went down. Now it's only a little bit more active, but it's more active. So even the volume has started to come back to normal with this market. So is that going to continue? I think it will. I think it will continue through the spring, probably through the summer. Depending on what they do with interest rates, it might start to calm down a little bit, but you can see that what ends up happening is buyer activity just spikes. And then inventory, last year inventory spiked up and then it didn't go up as much, so buyer activity had to come down. So if inventory continues to go up, I expect buyer activity to go up. It's going to take a lot of inventory to overtake buyer activity and get us into a buyer's market, especially during the spring to summer season. But the market's looking healthy. It is still a good time to buy. We haven't gotten into crazy bidding and crazy overpaying. Buyers are being more picky. They are being more conscientious with their money and with their escalation clauses because of the interest rates. They're not so free with going above ask. So just keep that in mind when you're out there as both a buyer and a seller. What that means for sellers is you really have to make sure your property presents well or it's priced appropriately for its condition. If you don't want to do work on your property, that's absolutely fine. But don't think that you can put the market or the property on the market and compete with properties that are prepped appropriately and get the same dollar value. You need to price it appropriately, and we can help you do that, both sides. We have contractors can help you update the property, or we can tell you where you need to be with the market. Okay, so that's what's going on right now. If you go over here and you go into the seller's market versus buyer market, because of, I need to erase this real quick, bear with me, figure out how to do this. Because of this increase in inventory and a little bit of a dip in buyer activity, this gap narrowed quite a bit. And remember, that gap is what determines how strong of a seller's market we're in. So we came down, which I'm glad we did. I was anticipating seeing that. I just glad to see it actually happen. So from this point on, we have been in a continual uptick in our market movement towards seller activity. I expect this number to go up into this range next week. I expect inventory to either come down a little bit or go up a little bit, but I don't expect it to come down like this again. And then buyer activity, I expect that to move up because there's more inventory to buy. So that's my prediction for next week. Let's watch it. Let's see what happens. You are now armed with what you need to know to go out into the market this week and make proper offers, sellers to price your property appropriately and know how to relate to what's going on with the buyers. And if you have any questions, please feel free to let us know. Also, if you would, please subscribe to this video, this channel, to help us grow this, to get our weekly market report out so that people know exactly what is going on in the market versus what the media is telling them. And also, please feel free to share the video with anybody you care about. All right, we'll see you next week. Have a great week and good luck out there.